Good evening. This is Russell Malley. I'm standing in for Doug tonight, and we're doing all you ever wanted to know about investment club withdrawals. This is probably targeted more for those of you who are treasurers, but all club members could uh, have a good knowledge of withdrawals, how they're processed, and the consequences of withdrawals. Okay, we have a few housekeeping things here to go through. All right, tonight I'm your host. In the back office is Sean Pulrang. He'll be answering some questions. We also have Treva Dildine, who's also member support staff. So they'll be answering your questions and letting me know which ones I should answer to. All right, there are handouts. There's one handout. It's in the handout section. There's also a question bar if you want to send in questions. Just type in the question and tell it to send it. It will go to us and we can handle that. If you're having problems, you should check the help and contact GoToWebinar about your problems, especially if it seems like you're the only one. If the audio is not coming in well, but it's coming in to other people. So those types of things you should contact the GoToWebinar people. Okay, so now we can get started. All you ever wanted to know about investment club withdrawals, and these are member withdrawals. All right. In the old days, it was often called a buyout, and that term has been used before. I don't think you should use that term. It usually refers to a third party buying directly from a member and not including the partnership in the transaction at all. Most model partnership agreements don't allow a member to sell their partnership interest to a third party without the permission of the other partners. So that's usually not a problem, but there is a big problem if it does allow a sale to the third party can trigger technical dissolution of the partnership. Now, usually it doesn't mean you have to get a new federal tax ID number stuff, but it does add paperwork headaches with the IRS. So you want to avoid hitting a technical dissolution of the partnership. We'll go over how to make sure you don't do that. The nice thing about it is if you process a withdrawal is not considered a sale, so it cannot trigger this technical dissolution of the partnership. And it's usually not a problem because you have to sell at least 50% of the partnership to do that. And that doesn't happen very often, but if you can avoid even the possibility, that's a good thing. So one way to do that, make sure the assets for withdrawal come from the club and not from any member or outside person's personal funds, right? This includes other members, not just third parties, but other members paying a leaving partner directly. And if the current partners want to contribute to paying for a member withdrawal, helping fund it, they just put an extra deposit, add to their regular deposit, and then use club assets to pay off the withdrawing partner. So no direct payments directly to the partner withdrawing. Those should always come from the club assets. This is just a quick visual graphic about what that, you put in new money, you put it into the partnership, and then the partnership funds the payout from their funds. That's what you want to do. You don't want money exchanging hands between a third party or between individual partners and leaving the actual partnership out of the transaction. So how do you go about proceeding with a withdrawal? So that depends what type of withdrawal you want to do. Is it a partial withdrawal or a full withdrawal? And there are different tax ramifications for the type of withdrawal. And if securities are transferred, the rules for cost basis transfer are different for partial and full withdrawal, so you have to take that into consideration. We will cover that tonight. Some ways of paying for funding a withdrawal are beneficial to the club and the withdrawing partner, so we'll go over those ones that are more beneficial have benefits to both parties. Other plans benefit more the partnership than the withdrawing partner. The withdrawing partner may still think it's good enough. But one thing you should always do is follow the withdrawal procedures in your partnership agreement. That's really a legal document that you are bound by. So make sure you do it, follow those procedures. And if a partner is disgruntled about the procedures or thinks they didn't get paid enough, if you follow your procedures that they agreed to, it's hard for them to have any type of recourse when you've followed what they agreed to in the first place with your partnership agreement. So my iClub does have help in it for helping you determine the best way to fund a withdrawal. And there are two ways. This first way, you click utilities and you'll get the utilities menu and you'll see withdrawal calculator in the main page. This link to the withdrawal calculator is available to all members. Okay, there are other ways to access this withdrawal calculator. It's only available to the treasurer or an administrator. And that's the next one. It's in the member withdrawal screen. You click on the member withdrawal or the member withdrawal calculator. In the withdrawal entry, you'll see in the red oval here, there's another link to the withdrawal calculator. So these are considered transaction entries. So these links would only be available to an administrator or a treasurer, someone who has the privileges of entering transactions. Okay, when you get to there's a parameters page, and it's asking you what partner it is it a full or partial, what date you want to do, and you will go ahead and enter those, and then click that calculate the best possible withdrawal scenarios button. When you do that, you get this, the withdrawal scenarios, and it lists them, which ones, oops, that should be up higher. I need to make a little adjustment that didn't show before. There we go. So I have it doing me. It will give the recommended scenarios. So we sell some depreciated securities, pay off with cash, and we'll list down, and then it will show you things that are not recommended at the bottom, right down here. It's too big to fit in this one slide, so we'll continue to the next slide. So this is a summary of that. So when you're funding a partial withdrawal, things that are beneficial to the club are sell depreciated stock or pay with cash. Things you don't want to do, and we'll go over why that is, sell appreciated stock or transfer securities. Now, those have less benefits than the recommended methods. Okay, so the recommended scenarios. Sell depreciated stock. Well, you harvest your losses. Members can get to offset their personal gains. You also offset club gains, so members have fewer gains to report on their K1 and then on their personal tax returns. And if you know you only need to sell, it's an opportunity to do some portfolio management. You know, try and figure out which stocks don't have future or less future potential, where you might want to sell those. Okay, now the next one, pay with cash. Now these are the easiest to enter for a treasurer. On the downside, you may need additional capital contributions from members or from members to fund a withdrawal in cash. Next, the things you want to avoid. if at all possible. Selling appreciated stock, right? That gives the current members a tax liability for their share of the gains, right? And that will be a current year tax liability, right? Also, you may not have any stocks that you think don't have good potential. So selling those, you may be selling off something that has good future potential. So you're going to have to do a little extra work and do your SSGs to figure that out. Transferring securities for a partial withdrawal is not recommended because it doesn't have advantages to both the club and the withdrawing member. It's more of an advantage to the club. You get to benefit from the increased value of the shares. You get to pay them off at the market value and not at cost. But the withdrawing member receives them for their personal portfolio at the club's cost and holding period. Now, that means if they sell those shares quickly, they may end up realizing a gain from their withdrawal that they would not have realized if they had been paid in cash. And we'll go over how that works a little later. All right, now we'll go to full withdrawals, right? It's a little different there. Transferring securities is a recommended payment process. Selling depreciated stock, paying with cash, and the thing you want to avoid is selling appreciated stock. It would be much better to transfer appreciated stock than to sell it in for a full withdrawal. So why is that? Recommended scenarios. Transfer securities. Well, the club gets to conserve cash. The payout is at the market value of these appreciated stocks, not at cost. And for the member and for the club, you get to defer the capital gains on those transferred shares. Now, the continuing members don't get to completely get out of paying capital gains on the appreciated value of those stocks you transfer, but it's deferred to when they withdraw. So, and then if they take shares, it can be deferred even further. Selling depreciated stock, again, the same thing for a partial withdrawal. You get to harvest losses and offset club gains. Now, if you don't have gains to offset, this loss can be transferred for the members to use on their personal capital gains. And again, it can also be used, as we mentioned before, as a portfolio management opportunities. The last recommended scenarios for full withdrawal is to pay with cash, right? Again, that's easiest on the treasurer, but again, you may have to raise additional capital contributions if you can't do it through selling depreciated stock. Things to avoid for funding a full withdrawal if you can, and that's selling appreciated stock. The reasons are the same as for partial withdrawals. All members get a current year capital gain tax liability for their share of the gains, and you may have to be selling shares that have a good future potential. Okay, so next thing you might want to consider is, when do you date the sale transaction? Now, if you decide a sale is needed to raise funds, when do you date the sale transaction and relative to the withdrawal, before or after the withdrawal? And that depends on what the club wants from during this process. If you don't care, if the withdrawing partner, if you want them to share in the gains and losses at their pre-withdrawal ownership, then you want to make sure you date the sale transaction before the withdrawal. If the withdrawing member will not participate at their pre-withdrawal ownership in any sell transaction dated after their withdrawal. So if you want them to share at their higher ownership percentage, date it before the withdrawal. All right. Now, do you want the partner to share in the gains or loss at their lower post-withdrawal ownership percentage? Then date any sell transaction after you enter the withdrawal. Now, a reminder, post-withdrawal ownership for a full withdrawal is 0%. So those members who are fully withdrawing will not have any share of gains or losses or other income, dividends, that is dated after their withdrawal. So if you want them to be participating in those items, you want to make sure those income sales transactions are dated before, not after the withdrawal. Now for the withdrawing partner themselves, it really doesn't matter much if for a full withdrawal, whether you date them before or after the withdrawal. And that's because their share of the gains, if you do it before their withdrawal, gets added to their cost basis in the club. So their gain from their withdrawal will be less, and the total ends up being about the same of gain from current year income of the club, their share of that, plus their gain from their club investment ends up being pretty stable. The total of that stays about the same. It just is distributed differently depending on how you date the transactions, the sale transactions or other income transactions. So here are some other tax intricacies of when you transfer shares. So how are those securities received in the partnership by the partner when they have some sort of liquidation event, either a partial or full withdrawal? And there are two main controlling factors, right? What type of partnership is transferring the securities? And is it a full or partial liquidation of the partner's interest? Now, the first one's pretty easy, the type of partnership. If it's a business partnership, they're actually selling a product or service. They treat securities as cash equivalents, okay? But investment partnerships treat securities as property, and you have to use the property transfer rules for determining the cost basis to the partner who is receiving the transferred securities. Now, better investing style investment clubs are investment partnerships, so they will be treating any securities transferred as property. Now, the type of withdrawal then comes into play. Is it a partial withdrawal? In that case, the holding period for the member of the securities involved is the same as it is for the club, right? The cost basis to the member, though, is also the same as the club. Okay, and then for a full withdrawal, the holding period for the securities received is the same as the club, but the cost basis is much different. It's based on their adjusted basis in the club. So the members' cost basis in the club. I see we have a raised hand. Is there a question about those so far?
I think someone had a question that coincidentally, I think you just answered. Okay. It was mostly about the
partial withdrawals.
The withdrawals.
Okay, I see there's another one about holding period. The holding period is essentially the date you purchase it until the date you sell it. So the holding period start is the purchase date. In this case, for a partial withdrawal, for partial and full withdrawals, it's the day the club purchased the shares. And that would be the start of the holding period in both types of withdrawals. So here's a little quick table of security transfers for a partial withdrawal, right? So this is at the top, these are the holdings of the club, and it's going to be transferring 50 shares of Apple, 50 shares of Zoom, 50 shares of Ulta. We see the club's cost and the club's purchase date. And then below that, you see what the members' cost basis and holding period start, the purchase date for the member would be for their personal holdings when they receive these. And you can see it's exactly the same as the club. And that's what happens in a partial withdrawal. The club's cost and the club's purchase date transfers exactly over to the member. All right, so how is it possible for a member to get an unnecessary capital gain from receiving shares, right? So the member's gain is calculated at the end of the tax year. Now, it doesn't matter. They can take out more than their cost basis during the year, and they don't get a gain unless their tax basis is below zero at the end of the year. So they can add to their, increase their contributions, so they bring the negative to zero. But if their member is, the cost basis is negative at the end of the year, the magnitude of that negative balance is a capital gain, and then they have to declare that gain, and the cost basis is reset to zero for the next tax year. For investment partnerships, a negative cost basis cannot cross tax years. It has to be reset to zero when you change. And that is automatically done by the allocation of income process in my iClub. So here's how a partial withdrawal might, where you receive stock, might cause a member to get a capital gain from the withdrawal. Well, a cash withdrawal does not. So here's the scenario. The member's cost basis in the club is $10,000. They're taking a partial withdrawal of $5,000, either in stock, or all in cash. So for the stock withdrawal, the basis of the stock is the same basis as the club had. In this case, we'll take the Apple shares from the previous example, in which its cost basis is $17.58 for the 50 shares, and that's what the member receives. Even though the market value is $5,000, you're paying them completely off in Apple stock. Now the member sells all 50 shares immediately for $5,000, and they realize a gain, the difference between $5,000 and their cost basis $17.58. So they have a capital gain of $3,242. Now the upside is their cost basis in the club only goes down by $17.58, not $5,000. So their cost basis are going to be $82.42. Now for the cash withdrawal, the member receives $5,000 in cash. Their cost basis goes down to $5,000. The cash just drops their cost basis by $5,000. It's not negative, so they don't have a gain for the year, and the cash they received is not taxable because it didn't go down to take their cost basis below zero. So that's an instance of an example of how taking stock in a partial withdrawal and you cash it out very close to the withdrawal date can give you a capital gain from your club investment, whereas taking all cash might not. Now, there are some other intricacies of taking securities for full withdrawals. Right? So we mentioned the member's adjusted basis in the club. So what is that? Well, it's your member paid in plus earnings. In my iClub, that column on the member status report, paid in plus earnings, is their cost basis in the club. So you look at a member status report from the valuation closest to the withdrawal date, and then you add that member's share of the year-to-date earnings from the club, and that gets added to their paid in plus earnings. The program will automatically do this when you process a withdrawal. And if they receive cash, the cash amount is subtracted from the amount above, and that gives them your adjusted basis just before the withdrawal, and that's the basis on which any gain is calculated, and that's the amount that's transferred as cost basis to the shares received. So here's an example. A member has a cost basis of $11,250. Their share of income, their share of the club's income at the withdrawal is $1,250, so that brings it up to $12,500. They receive $3,000 in cash, so subtract that from their cost basis. So their cost basis for at the withdrawal is $9,500. And if they received only stock for their withdrawal, if you added up the cost basis of all the shares they received, it would come up to $9,500. And that's what would be their cost basis that they would use when they sell the shares they received. Now, the club's cost basis does have an effect, but only in certain instances. It's mainly if multiple tax lots are transferred to the member leaving the club. If there's only one tax lot transferred, the total member's cost basis in the club gets transferred to that one tax lot. And it doesn't matter what the club's cost basis in, that's what the member's cost basis in the club is what's going to be the cost basis. So in our previous example, if they only received one tax lot of Apple, it would be $9,500 would be their cost basis in those shares. Now, if there are multiple tax lots, and that means if there are multiple company shares, you're going to have multiple tax lots. But then it gets a little more complicated. The rules are pretty complex. It depends on whether the member's cost basis is higher than the cost basis of the shares being transferred or lower. If you want to see a description of the rules, you can see IRS Publication 541, Partnerships, and the property distribution discussion starts on about page 4. If you really want it, you can email me at some point and I can give you the tax code reference for it too. Now, the algorithms for allocating cost basis to the withdrawing member of all the securities transferred is covered and follows the rules, the IRS rules, so you don't have to worry about it. You don't have to try and do any calculations. And the member withdrawal distribution report shows each individual tax lot. It shows the club's cost basis, and it also shows the member's cost basis in the shares transferred. And unless it's a partial withdrawal, it rarely is the club's cost basis. And if it's a full withdrawal, I can guarantee I haven't seen in 20 plus years the club's cost basis and the member's cost basis and the club's cost basis being the same. Now, there is a little difference. Some of them transfer only directly as club's cost basis, but that's because of the rather complex rules and whether you have to adjust the basis up or down. Okay, questions?
I think it's going pretty smoothly tonight.
Okay, well, I don't see, yeah, I'm looking at it, I don't see any others. Okay, so we can continue.
Oh, you know what? One question, I don't see it tonight, but I know I've been asked this in the past, is when shares are transferred, maybe just a quick reminder there is, shares are transferred, do they take the holding period of the club or the member, or are they just automatically assumed to be long-term? My apologies.
Oh, we did cover that. The holding
Okay.
period starts, the start of the holding period is exactly the same for the member receiving the shares as it is for the club.
Gotcha.
So if the club bought it on April 15th, 2010, then the holding period starts for the member receiving those shares on April 15th, 2010.
Awesome.
So it's not automatically long-term. Because if the club bought it only, 6 months ago and they transfer it to you, then it would be a short term. You'd have to hold it for 6 months more to make it long term. Okay, now here are some little details specifically at treasurers or those who are assistant treasurers. All right, when you're entering withdrawals in my iClub, do not date them the same day as a valuation date. None of our products like transactions dated the same day as a valuation. Date it at least the next day, right? When you're entering withdrawals, you can enter as many cash withdrawals on the same day as you want. But if you're entering multiple withdrawals that include stocks transferred, you cannot put them on the same day. It just doesn't track the number of shares held in detail enough. If you do it one day later, then all of the shares transferred won't be available for the next transfer. So keep them at least one day apart. You can mix up cash withdrawals with one withdrawal with stock. As long as only one withdrawal of stock, you can have as many cash withdrawals on the same date, but just keep only one withdrawal with stock on that date. And you want to be sure to give the withdrawing member a copy of their withdrawal distribution report. That's because their K1 will not have their cost basis in the shares reported to them on the K1 at tax time. As a matter of fact, it won't give them their gain. It will only show their the total amount received, and it might be on two lines: what was received in cash and what was received as property. Okay, the other thing is because the cost basis to use for a partial withdrawal is the year end, you can't accurately determine the gain from a partial withdrawal, if any, until after the allocation of earnings is completed at the end of the year. Okay, once it's completed, then the gain can be accurately calculated. It will appear then on a new withdrawal allocation withdrawal distribution report. It will have the gain information if the allocation has been year-end allocation has been processed, and also the allocation report at the bottom reports gains from partial withdrawals. Right. So that's that third point. You know, the withdrawal distribution report cannot accurately report gains until after the allocation's been performed. And the Schedule K1 has to be filed and prepared for any partner who is a partner for any time during the tax year. So even if they're only a partner for one day, they have to have a K1. Now, if you're using our tax software, the federal tax printer or the state tax printer, if a member has been a member at any time during the year, it will generate a K1 for them. Now there is my iClub allows you to put two different dates, the announcement date and the payout date. And we call that the two-part withdrawal process. This is a personal thing with me. I don't like it that much. I like those dates to be the same, the announcement and the payout date. Then you can choose the suspense account as the source of funds. That goes negative. And then when you actually pay them, you don't have to, you can have a time lag from payment. You just do a cash transfer from the broker or the bank, if you're paying it from the bank, to the suspense account. Now that negative balance in the suspense account will remind you that you owe someone a withdrawal. I would put a comment when you're doing that, like payment for withdrawal for Jane Doe. This one is especially important to follow and not use the two-part if the withdrawal announcement date and the payment date are in two different tax years. And one of the problems with that, if it's in two different tax years, you pay them in the next tax year, the tax printer for the next tax year will think they're still a partner and will generate K1s for them. Now, I believe we're starting to change this. We're not call it announcement date, and at some point it's going to be changed effective date. And this personal picadillo of mine probably won't be effective anymore. It won't have a problem. And this actually predates when my iClub to when the first online club accounting was from EasyWare software before the merger that created ICLUBcentral. I didn't like it. I didn't think it worked very well. It works much better now, but it still has this problem, especially when you have it in two different announcement date and payout date in two different tax years. So this is just showing you if you want to do it my way, just put the announcement date and the payout date and match those, right? And then when you're choosing the account to pay it, choose the suspense account, and you can see that with that orange arrow, choosing the account that's paying it out. Okay, another important thing is you have to give instructions to the broker. right? And you should give them specific instructions about what tax lots to transfer because you want your broker records to match your My iClub accounting records. Now, My iClub uses first in, first out, or FIFO, as the default for transferring shares, but that can be changed. And the member withdrawal report will show each tax lot transferred and will show you the club's purchase date. So here are some examples of instructions. You can tell them, give them a list of the shares to be transferred and say, please use first in, first out, or FIFO when transferring the following shares. If you don't want to follow FIFO, then you have to tell them exactly which tax lot to take the shares out and transfer to the withdrawing member, such as transfer 50 shares of Apple from the tax lot purchased 4/15/2015. And you will have to do that for every tax lot transferred. Okay, that makes it, default, makes it a little easier, but sometimes the club doesn't want to do that. They want to keep the older shares. Maybe they have a more gain or less gain, and they want to get some shares that some more recent shares have a higher gain, and they want to transfer those instead. So, but you're going to have to give your broker some specific instructions. Okay, that takes us to another transition where we can take some questions. I see. Steve asks, should the withdrawal report be generated at the time of the withdrawal or at the year end? And that really depends on if it's a partial withdrawal or a full withdrawal. A full withdrawal, the withdrawal report will be accurate right after you enter it. However, a partial withdrawal cannot be accurate until after the year-end allocation. So that's the two things. Generate, if you want an accurate one, generate the full one anytime after the withdrawal is entered. For a partial withdrawal, if you want it accurate, you must wait until after the year-end allocation. Otherwise, any gain reported will not be accurate. In fact, if you do it before the allocation, the report for a partial withdrawal will tell you the gain cannot be calculated until after the allocation. So Thomas asked, describe typical transfer paperwork for a club. Well, we might be getting to that later. There are some typical questions, but it will probably depend broker to broker. So you're going to ask your broker about that if they have any particular paperwork they want. Sometimes clubs have just been able to write out on a word processing program, list the member's account number, their name, say transfer shares, and give the list of transfers and the instructions, and tell them what account, take this from our account, the club account, and the account number, transfer them to this account number in this person's name. So that's typically, if it's from one account at the same broker to another account at the same broker, that usually takes only about 3 or 4 days. And usually they do it for free. They don't charge the club or the member for that. It's a little different if you're transferring to an account outside of the club's brokerage firm. There may be a cost involved and it will take longer. It may take 1 to 2 weeks. And again, that you'll have to discuss it with the broker and how long it would take and if there's any cost. But you will need to give specific instructions still about which tax lots you're wanting to prepare and the sending account and the receiving account. Okay, well, I don't see any other questions we haven't. Okay, there's I don't understand quite what Jesse is asking about clubs. Clubs adding to their portfolio every month. Yes, when you do a withdrawal, you put in its effective date, it's always, the value to be taken out is always based on a set valuation date. So any changes after that date aren't going to affect the value of the unit. So if you're adding to the portfolio after the valuation date, but before the withdrawal, it shouldn't have a problem. You will be able to withdraw members that way, even if you're making portfolio changes. It's probably best to wait and put your portfolio changes after the withdrawal, but there's no reason why you can't enter the changes before the withdrawal date. Okay, here are some common questions we come to, so just in case. So, you transfer appreciated shares. The club has an unrealized gain. What happens to that gain? Do the members ever realize that gain? Well, unfortunately for them, yes, you do. It happens when any remaining members, when they withdraw, they will have a higher gain from their investment in the club equal to their share of that unrealized gain of the transferred shares. So it's deferred until they withdraw. Okay, and they can defer it even longer if they take stock at their for withdrawal, because then their cost basis gets transferred to the shares they receive, and they can wait and manage any capital gains from the sale of the shares they receive a little better. And that's one reason why we recommend transferring shares for full withdrawals. Another common question, there's a time lag between the withdrawal when the shares actually get deposited. What happens to the market value changes during that time? Well, nearly every model partnership agreement I've seen states that the ownership transfers on the date the withdrawal is processed in your accounting software. So there is a time lag where the market value can change from when it's entered and when it's actually deposited into the member's account. Most partnership agreements say the member accepts that risk during the transfer. So that's why important. Do some planning to minimize the delay, right? Ask the broker how long it will take. Then you can process the withdrawal so you minimize that delay. And again, if you're transferred to another broker, you're going to have to find out how long that might take and take that into consideration also. Does the gain from the withdrawal, from the investment in the partnership, appear on the K1? And no, it does not. The only gains that appear on the K1 are the partner's share of the club's capital gains during the tax year. Their gain from their investment in the club does not appear. What does appear is the total amount received. And again, there are different lines are used for cash and property. If I remember right, there are lines 19 and 20, one for, I think 19 for cash and 20 for property. And the reason they're on there because securities are treated as property for investment partnerships. So that's another good reason why the member withdrawal distribution report should be given to every member at the end of the year, so they know what their gain is from the club. It will be reported to them on that, and they can enter it on their personal tax returns. Related, where does a partner report their gains from a withdrawal on their personal tax return? Well, it's a capital gain, so it is going to go on Schedule D, and it probably should go, not probably, but should go on the appropriate related form 8949. That's where you itemize your gains, right? I would suggest you use the description of the property type, just put a partnership interest. You can even say partnership interest in club name. The acquisition date for the property is the date you first made a capital contribution to the club. So it's generally going to be, if you took all cash, it's going to be a long term if you've been in the club more than a year. The sale date is going to be your withdrawal date. And then you can use the cost basis, and the proceeds are going to be reported on the withdrawal distribution report. So use those amounts on the 8949 and then transfer it over to the Schedule T. We had this problem a lot, not so much recently. So you tell the broker, this is the cost basis and the transferred shares, and they say, we're going to do it ourselves and we're not going to use the numbers you give us. If that happens to you and the broker says, no, we're going to use market value, or if it's transferring from the same brokerage firm that the club uses, the brokers say, oh no, we're going to use the club's cost basis. Let us know. You can see we devised a memo to help convince brokers to use what's on the withdrawal distribution report. And here are the web pages on the ICLUBcentral website where you can get that memo. It does cite the tax law and tells them, the broker, that yes, this is to be treated as property, and that the figures use the tax code to compute the cost basis to the member that's reported on the withdrawal distribution report. Whatever you do though, even if they don't change it, you want to use the values on the withdrawal distribution report when you sell these shares. Even if it doesn't match the broker and the broker doesn't change them, you are actually required to use information that you know is accurate, even if you know if your broker information you know is inaccurate. You're required to use the most accurate information you have. And in this case, if your broker refuses to use the withdrawal report figures, you know that the withdrawal report is more accurate than the broker in this case. So you should use the withdrawal report figures. Okay. Do we have any other questions? Let's see.
I think you've covered again covered most of it.
Yeah, Myrna asks, is it necessary to have a suspense account? No, it's not necessary. I've just found that it's a useful tool, but it's absolutely not necessary. You know, if you find if you have a way and you don't think it's going to be useful for you, there's no need to use it. I found it really quite useful. One of the ways I use it is not all of our partners do automatic deposit into the club. I get checks, but there's a time lag between the time the checks get to me. I can put them in and put them in the suspense account. I know how much checks then are in transit from me to the broker. And then when they get to then I know I can check cash balances. You know, my records will match the broker until they're deposited, and then I can do a cash transfer from the suspense to the broker account. But if you don't have that issue, you know, with checks going in transit, you know, there's no reason you have to use a suspense account. Okay, I think Miles had a question about partial withdrawals and why do we recommend? I think why do we recommend the transfer of securities for full withdrawals but not partial withdrawals? It's just that the cost basis rules for the cost basis transfer rules are different, and it's not as advantageous to the member to receive shares in a partial withdrawal. It doesn't mean you can't use that. It's just it's not as advantageous to the member. It's still good for the club. It's just not as good for the member. Okay. Let's see. Oh, here's my email address. If you find you have some other questions later, you can email me. This is in the handouts, of course, so this is our printout of the slides. And I think that's about it. We'll keep that up. See if there are any more questions. Oh, well, this isn't really about withdrawals, but it could come in involve this. Jesse asked about the My iClub and closing price that's uploaded, and and that of their broker. It doesn't match. That happens. That has actually happened to my club. One of the reasons where sometimes brokers will take and report, this is the most common type, a price to 3 or more decimal points. But our database of prices only takes it to 2 decimal points. So that could be one reason. And it's just a difference between the database we use and what the broker uses. The most important thing, usually it's only a few tenths of a tenth of a penny. Oh, over $2 a share. I see. That's a problem. There's another. I didn't know if this. She mentions particularly Fidelity. My club uses TD Ameritrade. There is another possibility. I don't know if this happens with Fidelity, but TD Ameritrade, after the market closes, TD Ameritrade, if you check the prices in your account, they start showing prices from after hours trading. We don't, ours stops at the end of the close of business. So that's another possibility. Your Fidelity may be showing after hours trades and is showing the results, the prices for after hours trades. And our database does not cover those. It will stop at the end of business. Oh, Thomas is asking what a suspense account is in more detail. The suspense account is just a cash type account. It's like a bank or a broker account where you show how much cash is in it. That's all it is. It was originally set up way back when this was first introduced for Windows, actually for DOS in the late 1980s, for exactly that reason. When you're sending in money to the broker, it's in transit. You know how much money's in transit, and it lets you know that it will keep your broker balance, so you don't try and spend money that's not in the broker account yet. But it can be used for other things. But the nitty-gritty is it's just another type of cash account where you can track cash. Okay. Well, I don't see any more questions. Sean, did you see anything that I missed?
I don't think so. I'm glad you noted the one about the closing prices. I would tend to agree. I know I see that sometimes, like you said, with Ameritrade, where the prices will be off by a bit, and it seems like most of the time I notice I'm looking at a closing plus an hour or two on my broker site, and my iClub that we use for business is just whatever the closing price at the when they ring the bell and put the market for the day.
Yeah,
So
that
that's it. That would
had
be
me
my
a
case.
little concerned for my club because I would check values and I'm seeing a big difference in the values. And I finally figured out that it depends on when you look at it. If you look at it right, an hour, I think after hours trading goes on for about 2 more hours after the
Mhm.
close of business. And I know TD Ameritrade continues reporting on your stock quotes. They report after hours trades.
Yep, yep. So I think
Oh, like
that's.
maybe a new question came in. Oh, Jessica says she is running them on a Saturday. I think that's going to take, sorry, Jessica, I think that's going to take a little more investigation than what we can do now. I'm
I will
out
also say.
of
Uh,
ideas.
I will also say. I will also say for that. Well, for that question. Um, Let me paste in the link here. Um, you should be sending the question to that link, not to Doug. Doug's a great guy, but he's not. Unlike Treva and I, Doug uh, is not member support uh, for 8 or 9 hours a day, 5 days a week. He's got a lot of stuff. So if you're running into that on even a semi-regular basis, I would say use that link that I just put in and send in a support request. We can have the folks who work directly with the price service take a look at that and see if they can find any particular issues that might be coming up.
Yeah, I see Thomas has a question. What article best describes club cost basis methodology? Um, well, I don't know what you mean by club cost basis. The club's basis is in a security or a member's basis in the club. The member's basis in the club is just follows partnership tax law. So anything about that. And if you email me and you see my email, I'll get back to you and we can narrow down what it is you really want. I've written some articles for BI on members cost basis in the club, not too much on the club's cost basis in securities or anything, but if you email me, we can narrow down what it is you really want, and I can get that answered for you. And I see we're about at 7 o'clock my time, 10 Eastern. So since there are no more questions, I think it's time to say goodnight. And thank you for attending our webinar. And I hope it's been helpful to you.
All right.